I notice, except for annuities, you've been avoiding the life insurance business. Do you anticipate investing in the life insurance business? I have a second question. Berkshire is selling at about a 3 to 4% discount. I also notice that certain people are shorting Berkshire A and Berkshire B.
On the life business, we have no bias against the life business. We are in the life reinsurance business in a fairly significant way through General Re. As you mentioned, we've done a little on annuities. The problem with the life business is that it isn't very profitable. And you can look at the records of the big companies on that, and that a lot of the activity in the area is in some way equity related. And Charlie and I have never wanted to get in the business of managing equities for other people. I mean, we want our sole interest on equities to be Berkshire Hathaway itself. So we do not want to wear two hats. We would never go in the mutual fund management business or any kind of investment management business, because if we were to be managing $20 or $30 billion in the investment management business, and we get a good idea that we can put $1 billion in, whose money do we put in it? So we'd rather just be wearing one hat, and that we want that hat to be Berkshire Hathaway, and we don't want to be promising other people that for us, half of 1% or 1% fee that they're going to get our best ideas, because those ideas belong to Berkshire, and we'd be misleading people if we promised otherwise. So anything that involves an equity component to it, and that's a big part of what's going on in the life business now. It's just something we wouldn't be comfortable being involved with. If you look at term life insurance, we've looked at that in terms of putting it on the internet. It is priced at rates that we find very hard, even with the absence of commissions, to make sense. But it's a business we understand, so we'd be perfectly willing to be in the life insurance business if we thought if we had a way of doing it where we thought there was reasonable profitability attached to it. Charlie, do you want to comment on the life business before I get to the A versus B thing? Or?
No, we do those structured settlements. That is sort of like the annuity business, and the life business we're doing is mostly annuities and on a very low-cost basis.
Yeah, anyone that wants to buy a non-equity related annuity should go to our website and find, in terms of the waiting for the safety of the product and everything, you will find a very, very competitive product, because it's a low-cost operation, and if you're buying it to get paid 30 years from now, you are certain to get paid from Berkshire, and you're not necessarily certain to get paid from various other entities. So we've got a very competitive product there, but it's not a big business. On the question of the A versus B, I've written something. I wrote it some months ago and stuck it up on the website regarding my own thoughts on that. Obviously, the most the B can be worth is 1/30th of the A, because you can always convert an A into 30 shares of B. The B may sell a slight bit above that 1/30th price before it gets to a level where it induces arbitrage between the two. So it can theoretically sell, and it will sell, a fraction of a percent above 1/30th of the price of the A. But if it gets above that, I'll buy the A and sell you the B. There's an arbitrage profit to be made, and probably the way markets work, most of that profit will be captured by the specialist, because he's in the best position to effectuate trades of that sort. But the B can never be worth more than 1/30th of the A, and it can never sell for more than slightly above 1/30th of the A. On the other hand, B is not convertible into A stock, so it can sell at a discount. I put on the web some months ago that I thought that, just my opinion, but I thought that when the B is selling for more than a 2% discount, I personally would rather buy B than A under those circumstances. If it's selling for the same price as the A, 1/30th the price of the A, but if it's selling on a parity basis, and I were buying 30 shares or more of B, I would rather buy A because you can always go one direction and you can't go the other direction. If you take the next 10 years, I would think that a fair percentage of the time it's going to be selling right about 1/30th of the price of the A, and there'll be periods of time when it sells at a modest discount. And I would say that when it gets in the 3 to 4% range, I regard that as quite a wide discount. If I didn't have a tax to pay myself, I might sell A and buy B if I was getting 4% more in the economic equivalent on B. It's not practical for me to do it. I know of some tax-exempt investors that have actually done that sort of thing. And long range, we will always treat the B exactly as we laid it out in the prospectus. There are two differences between the A and B. One is in the voting power relatively, and the other is in the shareholder designated contributions program. And otherwise, in all respects, B will be treated on the same basis as the A. We have even though Charlie and I own a lot of A and we don't own any B to speak of, we regard the B shareholders as being 100% on a parity, except for those two differences we laid out at the time of issuance with A shareholders. We would never, there won't be a deal ever made for Berkshire anyway, but if there would be, we would always treat the A and B on a 1 for 30 basis. We would not. We've been in situations where people haven't done that, and we've never been very happy with it. So we would always treat people proportionally. Charlie?
Well, I certainly agree with all of that.
The question about shorting, it doesn't make any difference whether anybody shorts any stock or not, really. I mean, if you were arbitraging between A and B, and the B was selling a little higher than the A, you might be buying some A and shorting some B, and you might delay conversion because you might figure the B might go to a discount, and then you'd unwind the whole transaction rather than convert. I mean, there's a lot of techniques that Charlie and I have engaged in over the years, and other securities that apply to that sort of thing. But shorting doesn't hurt us in any way, shape, or form. I mean, it doesn't make any difference. I don't care whether the short interest in the A is 1,000 shares or 100,000 shares. You know, somebody sells it at one point and somebody buys it at another point, and whether you reverse the buying and selling doesn't make any difference. What counts is the intrinsic value of Berkshire. And if we increase the value of Berkshire at a reasonable rate, you know, the shorts will have to figure out how to eat 3 times a day. Yeah.